when can you pull the trigger on the big, I guess, the elephant-sized deal that Warren Buffett will always talk about?
We're going to start not with elephants, not rabbits, but small animals.
What are you looking for?
What are we looking for?
Yeah.
We're looking for businesses that have great, durable economic characteristics. It's an uncertain world. So you want a company that can withstand tariffs, pandemics, volatile interest rates, volatile moves in currencies, et cetera. We look for the kind of super durable growth company. We want businesses that are high returns on capital, that can grow as far as the eye can see, that are non-disruptible. And we're going to look for businesses that of a scale that's appropriate in light of the scale of Howard Hughes. Howard Hughes today, 11, 12 billion of assets, 5 billion or so of equity. Our freely available cash today, call it $1 billion. And then we'll work from there.
How are you, essentially you're building a modern day Berkshire Hathaway. How would you compare yourself to Mr. Buffett in terms of how you invest?
He's got more experience than I do. He has a different approach to health than I do, but I aspire to have his longevity and his mental acuity.
No cans of Coke for you, right?
No cans of Coke. I'm not a huge fan of Coke. I think it's caused a lot of harm. But I would say I've learned a lot from him. I would say Warren loves the same kind of business as we do. He hasn't, I would say, generally been prepared to pay up for them. He has very, very disciplined on. I'm not aware of a business he's purchased where he paid more than 10 times basically operating earnings. I would say when we bought Chipotle, it didn't look cheap. Many companies we've invested in over time didn't look cheap at the time, but they became cheap very quickly by virtue of growth in the earnings cash flow of the business over time. But I would say very similar principles about how we think about capital allocation, how we think about incentives, how we think about the kind of people we want to do business with, the kind of people we want to partner with. So
you were in that room, or you were at the Berkshire meeting, correct? What was that? For those not there, take us inside there. What did it, when you heard Mr. Buffett say he would retire at the end of the year, what went through your head?
So you're in a room with 44,000 people or something like this, all of whom, or many of whom, Warren has completely transformed their lives from a financial perspective. I don't know how many millionaires, 10 millionaires, 100 millionaires, billionaires he's created just by virtue of them owning the stock. But, there are also many people there that may not even own Berkshire, but learn from Warren, followed his principles, built careers in the industry. I'm certainly one of them. I don't own Berkshire Hathaway stock today, but I still go to Mecca because I want to reset, make sure my investment values kind of stay the same. I think all the shareholders have been nervously not looking forward to this day, I would say. But what a graceful way to pass the torch, an emotional moment, almost tears in his eyes, I would say. I think his longtime partner, Charlie Munger, passing away, obviously a massive blow. But he still was remarkable. 94, 3.5 hours of Q&A with like a 1 hour break. I mean,
nobody else is doing this.
It's amazing.
What are some of the biggest challenges you think his successor, Greg Abel, will be up against?
So Greg, I think, is a spectacular operator, and by all accounts, I'm sure he's also an excellent allocator of capital in the businesses that he's overseen. I would say the challenge for him is he's got $350 billion in the balance sheet that Warren Buffett couldn't find a way to spend, right? So that's going to be important. And he's not going to be able to spend it all buying stock back, right? And I don't think he's going to pay some crazy dividend. So I think the biggest challenge for him is to find places and ways to deploy that capital intelligently in buying businesses that are not currently owned by Berkshire. Right? It's a different challenge to think about buying a new company for $20 billion versus making the incremental decision to invest in this power asset, or this subsidiary of Berkshire.